Hey, so today is uh, April 9th. It's actually pretty late. And this isn't so much a recap, it's more discussion about planning and also how you assess your trades and how you plan your trades for the day. Um, Something I just essentially just uh, I won't so much say learned or discovered, but if anything, I kind of realized that the best way to trade is to plan the day, and you pick your stocks based around how you trade and how you want to make your plan. Now, this is not something I've been very good at. I have been very reactive in how I trade, and I noticed that because of that, I have tended to lose a bit of money, um, and I've been very fascinated with how traders are able to make their plans and essentially just trade their plan. It's not been something I've fully understood, um, but today the my trading day would have been a lot better had I not so much stuck to the plan, but implemented a proper plan. There were certain setups that I discovered while I was planning my watch list, and through those setups, I didn't make an execution plan. And what that means is um, kind of determining your entry, possible exits, and also determining your plan based on probability. So there are six tickers that I considered today. Um, well, actually seven, including the SPY. I traded, I think, all of them except from one of them. But I'm gonna go. Obviously, I've already. The day's gone, and it looks like this is hindsight. But even in hindsight, a lot of this will make sense, um, because the plan was based around what was there already. So apart from the trend channels, or let's call them micro trend channels and macro trend channels, okay? So this is a micro trend channel. Essentially, it's the trend channel that I have plotted throughout the day. I actually did not trade SQ, but I put this in there for a plan, and I'm going to consider that in case I traded it, because I traded it yesterday. But in its place, I had Neo, which I traded. All right, so let's just put this in here and get this ready for today. All right, so we're gonna start off with the most obvious one, and then we'll kind of build up the different. We'll build up from that. The most obvious one this morning was Mara. So Mara had put up this falling bearish wedge. I plotted this morning. Let's actually put it on the 30-minute chart because it's a lot cleaner. So before the market opened, I noticed this pattern, and the way I plotted that was I noticed this point, this point, this point, this point, and I think at the time this, when I started looking at this, actually yeah, it was about 7 o'clock in the morning, and so I plotted this as well. Now, did I have pre-market on or not? I'm not entirely sure, but let's just assume that I did have pre-market, because I noticed now that the pre-market is actually important. So I anyway noticed this bearish wedge in Mara, and if we look at the overall scope of how it's traded, ignore this here today. What kind of gave me the conviction about this particular wedge was the fact that if you notice, you've had what, 1, 2, 3 pushes up, sort of a bull trend channel, huge rejection, and then you have this rejection, and then usually what we look for is a an attempt to rally back up, and that was this attempt yesterday, which obviously formed No, I actually didn't form that. But anyway, this was the attempt yesterday, and then another attempt again today, right? So looking at this uh, channel, I could essentially see what was going on, how the bulls and the bears have kind of been trading through this thing. So what I was then looking for was a rejection and a break of this trend. Now, whether that would have been what you have one, two, three pushes. That would probably, was it one, two, three? Then you would have had a break. You could have had a fourth one and a break. So I was looking for where this would have happened. I noticed that we had a rejection at this supply area, which I charted from here. So what we were then now looking for was how this was going to break through. It doesn't always break through instantly. I'm never really sure how it's going to do so, but I did notice that if you think about it, we had some sort of pre-market supply region. So if I put it on the 15-minute chart, and we had over here, and I'll just draw a red box. We had over here some sort of supply, or even this could have been the supply if you actually wanted to be more pedantic and said you're going to plot it from here and plotted this. Now, at the time when I was trading, I wasn't considering this at all. Now, let's actually look at the 5-minute chart, and I'm actually just going to. So before we actually do anything, before the market open, this is what the plan should have been or was, if I was working with a plan on Mara, right? Now, another thing again, just before that, demand regions, this was already plotted, or at least this was considered. There was a 4-hour demand area over here from there. So yeah, this I didn't actually put in the morning, and I said, well, if this breaks, we'll take it short. But I was looking for price to get to this region again. But when I think about it now, there wasn't any chance of it getting down here, especially if you're in a short. So as you can see, price is coming down, making lower highs and lower lows. It double bottoms over here because obviously we have a higher high double bottom, higher reversal over here. So now we're going back up, and it comes to test this region. And if I were following price from here and then following it, and the key here is to follow price to see how it works towards your plan. Now, as price is rallying up, we're looking for a trend reversal over here. So we're looking for a double top, right? I don't generally like these double tops, only because I prefer to see more candles, maybe at least one or two more candles like this one here. Here you just have an instant reaction down, but as you can see, it double tops over here and then it drops. Now, ideally you want to go short here, or maybe short on this candle and put your stop just here. What I was actually planning on doing, or what I was going to do, and I didn't actually do it until when it had already gone so far. I was like, hang on a second, I think I was already here, and I thought I really should take this short. But I wasn't, at the time when I was trading this, I wasn't thinking so much. I mean, I did play this short and I was scalping it. In my experience, every time I've seen a bearish wedge or falling wedge or rising wedge like this, this reaction is always, you almost get a measured move. I mean, this is a measured move actually, if you think about it. So this to this is 5.7 points. So from here to here, 3.6, so maybe from here, or 5 point something. Oh, then actually it's not exactly a measured move, but you usually get some sort of measured move, or at least you're aiming for that. Anyway, by the by, so the plan would have been, okay, now we have this wedge, we have a setup, we're expecting price to hit this supply region, but anyway, if we don't, we can get, because in my experience I know sometimes we don't, and the reason why is because of this. So we have, this is the next pullback, so this is, pullback down. And of course, as long as price does not cross here, we're always in short, i.e. the probability of price going any higher after a reversal is a lot less. So this actually just increases your probability. And then as long as price crosses this area over here, this increases your probability. The only issue is the moment you cross this region, your risk is a lot higher because this is your last pivot. So obviously the risk is a lot less if you enter on, say, this candle, because this is your risk, right? But the probability is a lot less because you still have this to get through. It's so funny when you think of it in that sense. Like, price could obviously reverse here and still head back up. So for me, I was looking for a higher probability trade, but of course that is more risk, which is the break of this thing over here. When we got over here, there's obviously the danger of a double bottom, or even almost a triple bottom. But I was ready to take this trade down. Okay, so what was it again? So anyway, so the plan is this, and taking it down. And of course you have this channel. Now, because it, again, like I said, it's a rising wedge, chances are you're going to get a very tight trading range. Not trading range, tight bear channel. Now, of course, when you have a tight bear channel, it is not very instant for you to have a V-shaped reversal as you have here. You wouldn't get the same response. You're obviously going to have some trading range here because of how tight this has been. This itself is another place to get in long. So in terms of determining your trades, you can decide to play this to this, which is what, a $1 risk. For usually I go for a 2-to-1, so maybe like this could have been a great not so much exit, but at least a great place to take some profits, or even here on each pullback. And you can also count the pullbacks. You go 1 push, 2 push, 3 pushes, and the moment you break out, you're already in the demand region. You know you have to get out at this point. You can now take the next trade, because obviously we're looking for a trend down, a breakout. Normally I prefer a double bottom to come, so I probably will not have taken this, but this in itself is a valid trade on Mara. All right, so that was Mara. The next one is Apple. Apple I did actually take, but I wasn't convinced with the first trade. So actually let's get in the analysis. So Apple has been rallying very strong of late. In fact, which is actually, it's due its own rally because everyone else has kind of done their own rally. So if you notice, you got 1 push, 2 push, and this is the third one. It's breaking out. I reckon we're probably going to get a big drop. I don't know where, because this is in no man's land. It's in the 50%. Actually, it's just crossed it. So we do have a supply region over here, in this region over here. All right. Anyway, it has broken out of the channel. Usually what happens is you have a huge spike in volume, and then you have a big drop, and then double top, and then you now get sort of a trading range or almost a reversal. Anyway, so the plan was to, price was over, where were we? Yeah, price is over here. I wasn't sure whether Apple was going to short because of the fact that we were in this channel. I mean, I haven't really plotted this. I mean, I don't know. I still have to do that, but that's just the idea. So when I started the day, we had these two supply areas already. We had demand over here. And so if the plan was, since we have price coming into this demand area, I didn't actually touch it, so maybe there was one that I missed, but there's obviously a demand area over here. It based out over here, so there's another demand area being created, which I haven't yet plotted, so I'll just put that in just now. Well, this is 5 minutes, so I'm not gonna, we'll do that on Monday. So price rallied, reached the first demand area, didn't really get a reaction for that. I'm sorry, supply. So in fact, we're just going to remove that. The second supply area, which was the one that I noticed, seeing this reaction, this is exactly what I want to see, this candle. So essentially price pushing up, but then not really getting up to the top of the bull trend, rejection, a second attempt, higher high, major trend reversal as they call it. Can't seem to get even any higher. This is where the bulls take over. You can take this short, and this would have been the idea. Take this short from here, risk 0.25, target is VWAP, which would have been 0.5, which was great target. And as you can see, price retraced. Now, the next thing again is because we have not, this is a 50% pullback. So the question is, let's see, how much was that? This is 1.94. So divide that by 2 gives you 9.7. So you want this, yeah. So this is less than 50%. So if anything, no, 0.97, not 9. So this is 50% over here. So let me just actually use this point. No, this point. So yeah, so this is 50% round about here. And price has not reached 50%. So we have a higher chance of price making a measured move of another. So if we take this from here to here, 1.89, we should have another 1.89. Okay, we don't actually get 1.89, but we get 1.6. Yeah, I feel like this does not look, well, actually that's interesting. So 1.91. Anyway, we get almost a measured move up. So maybe price. Anyway, because we did not get, this did not cross the 50% mark, there is a high chance that we're going to go a lot higher. This, an equivalent of this length. Let me see what that is again. 1.73, 1.78. Maybe it's from there. Anyway, so, and this is just something I just learned today. And I remember I was planning on going long at this point because I just thought, hang on, VWAP, this is exactly where I wanted to bounce. I can take it long from here. There's a high probability. You know, this is just a very little risk, not a very high probability, obviously, because this could still retrace down. Very little risk, really high reward, especially if you're targeting high of day, but then we're targeting a measured move. So this is what, 1.69, 0.692. So that would definitely have been more than 2R. And this should have been a good trade. So in terms of planning this day, this definitely, that other 2-hour zone definitely, this too would have been also another one to consider. But then I also like to plot these channels just to follow price. And here we have another basing area. So this is a basing area. So this created demand on a higher time frame. This is another basing area, another time frame, another basing area over here. So we have breakouts, another. So that in itself is a this in itself is a good trade. So, and this is just something I've just discovered. One could risk this breakout 0.3. Of course, it's lower. So seeing this trading range, looking for a double. Yeah, this is why this is a very risky one, because you have double tops here, so you could be going low. You have double bottoms, so you could be going up. God knows where you're going. But I think you are most likely to go up. But then again, you are at the top again, so it could be a reversal. And I think just the break of this, which is this candle over here, was what signaled that. Here is another trading range from here to here to here, and the breakout here. So these are definitely some trades that could have been taken today. So you had 1, 2, 3, 4. In terms of planning beforehand, you had 1 and 2. Because you don't know what's going to happen on the day, but you can obviously plan for this and this. Now, the reason why planning is so important is it allows you to determine how you want to trade risk. So for instance, now I would say I have a certain amount I'm going to risk for the day, and therefore I'm going to look for trades that I can apply that risk to. And there are times when you may see risk trade opportunities, but not take them because risk reward isn't great. And Tesla is a great example of that. There was an opportunity today. I believe I did take it, but the reward wasn't great. All right, it wasn't. It was a very high probability trade, but very little risk reward. So let's go into the plan for Tesla, and if we look, we had this channel. This is actually being redrawn, but this is the channel considering pre-market highs. So we have here high, low, and then another high up here, and then a low. So I think we plotted these 2 points and then extrapolated the channel here. So that gave us some conviction that Tesla was coming down here because we were already here at this point, and this is the bearish channel. Okay, so what was the plan? We had a supply region over here, and we had demand regions between these 2 points. Now at the time, the price had just double topped and was in short. Now, it's not very obvious what's going to happen. I did know that since we're at the top of the channel, we were definitely going down. The point was, where do I get into the stock? I can't get into pre-market because my broker does not have shares for short, so I have to wait till the market open. When the market did open, this is what happened. So I did mark out these levels. So I marked out this level as an area, possible area of shorting. So if, say, for instance, price came back to this level, highly unlikely because it's already rejected this level once. It's just very unlikely that price will come back again and reject, but I didn't think about it that time. Obviously, in hindsight, I'll think differently. But I marked it anyway, and I marked a demand level as well. I believe maybe I did. Anyway, so we had this range that was developing. I'm just going to remove this and then redraw it. So we had this channel that, and at the time I was thinking I could scalp this, sort of take, you have a two-legged channel. So you have this. So if you wanted to, you could have taken this long from this point, because you have this point, you have this point, you have this point. So you could have plotted this and extended this. So you already now have this point. Taken this long because you are in long, and gotten out over here. That's one, but I wouldn't take that trade. But that's one way of doing that, which is scalping that. And in doing so, you would put your risk over here and probably get in on this candle. And of course, you get a really good risk reward for that. The next one, which I took, was this. And this was not a really good one. Because if you think about it, your stop has to be around here. And that's 5.9. Not very good if you're coming down here. So your risk is greater than your reward. And for me, that's just not a really good one. You can't just put your stop here or on top of this candle, because as you can see, you'll be stopped out. This is where your risk, your stop is supposed to be, or at least up here somewhere. And that wouldn't have worked out. Anyway, so we just plotted this, followed price into this demand region, and we had exactly what we wanted. So the channel came out, and usually when it comes out like this, I'm usually looking for an attempt lower, and this is the attempt lower. The only issue is this candle would have probably faked me out, because my stop would probably have been here, and this candle, although was not the candle I wanted, because it would have been this candle, it did go long at first, and one would have gotten in here and been stopped out. So that's one that would have been difficult, even though this is a valid long setup. The question now is how much leeway do you put? This is why sometimes you need mental stops as opposed to hard stops. But anyway, we now had this wedge developing, and then I noticed here we have developed, because we had a long tight channel over here, not long but a short, we had developed a 5-minute supply region, and of course this channel, or not channel, but this wedge. I didn't actually see this wedge. I mean, I saw this wedge at the time and I traded this wedge. I didn't see this, but now I'm looking at it. The more we start heading up and we've gone past 50%, because this is like the 50% mark, the more likely this is going to be long. But as long as this does not cross this level, we're definitely in a bear channel. So we came here and the bears took over and pushed the price down, and of course that was very much displayed by this particular thing. So you have 1, 2, 3 pushes up. It's a parabolic wedge, 1, 2, 3, and took this short. I can't remember where we were targeting or if we actually targeted this, but at the time that was what was happening. We took this short. Normally would go for a measured move of this, which is like that, so probably be around here, 3.1, and I think this is 3.1. It's about 4, so this is probably about 4 then. Yeah, something like maybe to this 4.95. So this to this is 4.67. Okay. Yeah, anyway, so this was a good set. In terms of planning this and this, of course, coming down short, looking for a channel, heading down here, taking this long. This is something sometimes I look out for, the retracement back. But of course, when you have a tight channel, this, looking at how this is developing and forming is very important. And seeing how it responds, because at some point it should retrace. If it goes above, then we're definitely in a bull leg, and then you should start looking to taking more longs. But of course, as you can see how strong this is compared, and this as well, so a lot of red candles here compared to green candles. It's actually almost evenly balanced, so it's almost a bearish trading range, or at least a very small tight channel down. Look at that. It's always nice when you see these things touching each other like that. And then it almost looks like we have a flag developing here. I think this is a double bottom. Yeah, I think this is a double bottom, because this low and this low is higher, unless this is going to be a big drop on Monday. But I think this is a double bottom for us to go up. I think because we've done 1 push, 2 push, we've not done a 3rd push, but we've done a double bottom. It could be a 3rd one down. We'll see. The thing is, if we gap down, we're gapping down into this demand region, which for me says we probably go up. Yeah. So anyway, so that was the plan for Tesla. And we've done Apple, we've done Mara. VUZI was the next one, but I didn't actually trade it. And I think it was just more to do with these channels. So as you can see, we have, let's actually look at this on a much higher time frame. So VUZI, which I should have traded because it was the cleanest out of all of them. So you have 1, 2, 3, and 4. So we're certainly coming down. We are double topped. So this top, and then obviously we're looking for the challenge of that. That was the plan. So what I did was I marked the high, yesterday's high, and the plan or the idea was we're going to challenge yesterday's high and see what happens. If we're able to convincingly go past yesterday's high, which I don't think we would, because we are so extended, then we would go short, right? Because we've done so in the past. I think we did it over here. Here we go. We did it short. So I was expecting that to happen today. I didn't actually trade this because I don't know. I was just not really thinking. I was really focused on something else. This candle appeared at 10:10. There were just so many things happening. So anyway, we had this very strong rally. Whenever we have a strong rally like this, I'm never really sure about, and it's something I need to develop some confidence that this would obviously you'd have this response, because this is just so strong. This obviously means it's almost like a V. But if you think about it, in this particular leg, there's a reason why this has dropped with such power. So coming back again, testing this high, because we haven't tested it in the pre-market. So we've come to test this high over here. And then seeing that and this is the setup that I obviously love. So the plan was see what happens if we test this high. If we break this high convincingly, then we're going long. I don't generally play high of day breaks, and I probably will not have taken this trade if we had gone longer, or I would have probably looked for a pullback, but it wasn't really my idea. The idea was, and I didn't think it would have happened because, like I said, on the higher time frame, on the 1 hour time frame, we had already gone so far. So yeah, seeing price, if I had 1, 2, 3, 4, and then the high trend reversal, this would have been my candle to get in. This would have been my risk, 0.56. Now my first target will probably be this basing candle, which was, yeah, almost 2, 1 to 2 risk reward. This is a bit less than 1 to 2. Is that right? Actually, it is more than 1 to 2. It's 0.5. Let's just say 0.6. So we want 1.2. Oh yeah, it is less than. That just doesn't look like it, does it? So yeah, anyway, so that would have been my first target, only because there's demand over here, and as you can see, the candle started to respond to this area. But I would have probably taken some of it out at this point, just because of this candle. This could cause price to retrace. But if you look at it over here, this was nice basing region. We could have gotten short here at low of day, at the break of this candle, gone lower. So this is another push down. And if you notice, we had, let me just mark this. So we have here, second push. Well, let's do it this way. So I usually do it from here. No, it's always complicated. Let's do it from the top. So we take this and this, and then now this makes sense. So first push, such a strong push. So this definitely would have been a high probability short. Apparently, if you get in short here, this should be your stop all the way here, because then your risk is lower, is higher though. I don't know. I would have put my risk here, because I'm just, this is obviously a lot risky because we could reverse, but I don't know, I just looking at how many red candles are over here, I'm expecting another set of red candles. So what you have 1, 2, 3, 4, 5, 6, 7 red candles. Yeah, you expect a bit more, and here you get 3 with no green candles, so 3 after that, and then this is obviously a reversal. And it wasn't so much a reversal. With a tight channel like this, you're not going to get a huge reversal. This is just a pullback, and it's not even a 50% pullback. If you think about it, I mean, this pullback to, yeah, just about 50% just to this point. There was a huge gap between this point, where was it? This point and this point. So that tells you again how strong this this would have been, because if you have such a huge gap, you can expect this leg to be pretty big. And of course, when this got to this point over here, which is that low over here, then you now know that, oops, I'm just gonna take that out. That in itself was this in itself is the supply region. Let me just draw that. It's probably a 30-minute supply. Okay, it didn't actually get to it, but it doesn't matter. And then, yeah, so this resistance here, and then price started going back down again. So you have another region over here. So if I can just plot this channel from here to here, all the way up here. This would have been a good short. Obviously, this is your risk. Yeah, this would be your risk. So you're looking for not a really good risk reward. Yeah, I would have probably not even taken this. I didn't actually look into it, but what's this? 0.86. Yeah, you probably get about this, just 1-to-1. I don't usually like taking trades like that. All right, so that was VUZI. Then there was NEO. Neo I actually took a trade on, but I did not like. Again, Neo is just like Tesla, same channel, 1, 2, 3, and this was the fourth one. And as you can see, you were double bottomed. You're about to take this up. I actually have an option that I'm playing over the weekend on this. Two options, actually, two contracts, just to see how it will go. I'm only risking. This is my stop for those options. All right, so, but which is weird because I would want this to go a bit low and then rally. So I might actually increase my stop. Yeah, increase my risk. All right, so the idea was, again, just like Tesla, come down and then, obviously test this, but this obviously is what kind of has given me the conviction of a reversal. But anyway, so that was the plan. We didn't mark any regions apart from these zones. And in fact, what's even interesting is Tesla Neo tested the bottom of that zone. So this zone that we created, this demand area, was tested all the way to the bottom. So the first trade, I took a trade from Tesla when I saw this reaction, took it long and got out. Not Tesla, Neo. Didn't really make much out of that. So you have one, because I was really thinking that, well, look at this, it can't seem to get past it. And yeah, we now have another leg. So 1, 2, this is a third. And then you now have this reaction reversal. And then you want the higher one. This is where you go long. And from this point on, it's bombs away with a risk over here. So this would have been part of the plan to go long in here in this region. And it was higher than a 50%, but of course a double top, lower high reversal. I wouldn't have taken this short only because we didn't have the second top, the second test. This went back into the zone, and then we have a demand region that has been created over here, 5-minute demand. And as you can see, a double bottom. This would have been a good one to go long, because as we come back to test it again, gotten in on the break of this candle, this would have been, yeah, a good 2 to 1 at least. And we could have also tested this high, which would have been just here, would have been a good exit. So that was new. That was the only thing I would have tested on Neo, which was just this one and possibly this. In terms of planning beforehand, it's just based on the price moving. And it's so important to look at where price is going and what it's doing before you actually go in and make a trade. Who else again? Then there was SQ, but before I go to SQ, Baidu. Yes, Baidu is actually a really interesting one. I took a trade on that when I messed it up, even though it makes no sense. All right, so Baidu, I've kind of been looking at Baidu for a big drop, but it's broken out of this trend. So when that tends to happen, we have had what? 1 push down, 2 push down. So it's a two-legged pull. I mean, I don't know if this would be a push, but this is, this is part of this other trend. So it's 1 push, 2 push. And one could actually argue this is a push in itself, but you have, just like you have over here, you have this coming down here. Yeah, so we've kind of been in a trading range, and that is something I did not consider over the last few days, this trading range, if we kind of getting closer. So, this is your support, this is your resistance, and price is kind of being sort of bouncing in between. You have a double top here, and that is the thing. Double top means that we are going down from where we came from. So if we are here and this is where we're double topping, this is where we come from, and of course price did that, but it wasn't what I was thinking about at the time. I plotted these zones or these areas, and so what actually happened was I was hoping price would, and it's funny because now I think about it, there's no reason why price has to come all the way back up here when we are in we have double topped. So prices hit this, we are definitely going down. overall. So price again has tried but didn't get that far. And then you now have it here. So we had a demand area over here, another double bottom. So chances are you're expecting to go up, but price wants to come down. All the traders are shorting it. We started off with this triangle, and I remember I plotted this wedge and took a short from this point, but I didn't take it far because again, this is high risk. Your stop is over here, and the break on this candle, this is what, almost $1. So low of day is usually your first test. So this is a good 2-to-1, but of course this channel keeps going down. You have one leg push, 2, 3, before the reversal, and then reversal is on demand. So this would have been a good long 2, but again, where are you getting in on this pullback? Risk is down here, not really profitable trade, but this would have been amazing. And then finally, SQ. So the plan there was, this one you have one trade, you probably even take another one over here, but the break of this wedge, and then also taking a trade rejection of this area too. Then SQ wasn't anything that I took today, but I realized that if I was going to take it, there was a demand area that had been created. If we just put it on, this is a 30-minute demand area created that price retraced into. Now, why did I not plot? Oh yeah, because the supply is still far away and there's this big gap. So that's the only thing I would have been considering, which is taking it short from this supply area because there's nothing else in this region. So price opened up. I don't know, I wouldn't have taken this trade, but and the plan would have been after the first 10 minutes or 15 minutes, if price double bottoms in here, take this trade. I don't know, it's very tricky to take this trade. I've even showed on Tesla yesterday, we had that situation, and I'm always very wary of taking trades so early like that because you just don't know. Like here again, we had actually 4 candles, so this was probably, it didn't actually touch the zone, but you had a really good reaction. Didn't really get the, okay, you actually did get the double top, which was great, and then just take it down here. This would have been good on this candle. 2.58, so you're looking for 5, yeah. So this would have been a good short. And then you also had oh gosh, why did this come down again? There's a high probability that if this does not break this is going down again. I think that's the point. I can't remember. If this is testing this and you do not get past this on many attempts, you have this and you've tried it one more time, and you're definitely going to go, maybe I want to take in this because this is definitely where you would have gotten in. So this is a double top major trend reversal, and then so you've rallied, trading range, and then reversed. But anyway, so that was Tesla, obviously, but taking those trades early, it's always difficult to kind of assess. SQ I didn't trade, but I was looking at it for what I would have done if I had planned this trade. And in terms of planning, actually, let's look at pre-market. The day before was quite a tight trading range, but it wasn't a very strong, rally. Not a very strong rally. This place would have confused me as well. Not a strong rally. Oh, excuse me. Actually, I'm just looking at this now. This is actually gone below 50%, so chances are we'll go short, but we actually went long. So the thing again, before we even go into that, I would have given up on this and said I'm not trading this because this would have faked me out. But anything can happen in trading. You can have this, and then things can reverse, and and you just have to follow the price action to see what's going on. So you have this channel over here that I thought that led to a trading range. Actually, so maybe the channel, let me just use this. And then, yeah, so that's where the channel started. Oopsie daisy, here we go. So that's where the channel started, and then you go into a trading range, and then the channel started again, which was a very weak channel. Excuse me, I need to go to bed. It's 11:38. All right, so yeah, so what's happened is we've gapped down. We're now in a downtrend. Come back to the demand area that we created the day before, and then prices obviously rallied. Again, like I said, I wouldn't have taken this long, but there isn't any supply area to kind of take the trade short from. Yeah, there isn't one at all. But then just looking for this structure is really all I wanted. Just follow the price, based out over here, and then you now have this double top, taking it down from here, risking 1.05. You're going to view up, which is 2.42, which would have been a perfect trade. And then what now happened? You've created some supply. You now have another trend forming, and the first, obviously I wouldn't have taken this, but then the second one, because it can't seem to reach this, would have made me go short. I would have been a bear. Taking this here, 0.64, aiming for at least 1 point something. It's a 2, so you've gotten at least 3 times your R for this one. So this would have been a good one here. 1, 2, one could have taken this, but again, this is very difficult to unless you're going to be trading this. Actually, this spike here would have given me conviction to go long, but again, I don't know. It's very, unless I had broken out here. This is what, 2.4, and then I want 4. I didn't get it, so it's not a very profitable. I wouldn't have gone on this candle because I don't know if this is going down, so it's a low probability trade. All right, so that's all it is. That's all I wanted to talk about when planning your trades. It's easy to say this in hindsight, but you have to have an idea of what you want to look for and how you want to trade that thing. So for me, I'm trying to learn the different structures that I like to trade. Like some people are very good at trading these double bottoms. I haven't figured that out yet. I haven't understood that. Here's another double top. Some people look for those ones, double tops that are this far apart. I only look for double tops that are this close. And of course, after I've seen this here, this breakout here, I'm looking for a double top. So yeah, that was my trading planning session. Really just talking about how you plan your day. It's not something I've been good at, but learning how to plan structure and making, let's see, I'm just looking at how this, I should put the pre-market on, but yeah, learning how to plan your trades based on higher time frame, price action is very important. And then sort of taking your ideas based on that. All right, till next week.